Before we start this video, do like and subscribe to our channel and not miss on any updates.
Let's now have a look at the next question. This is on revenue recognition when there is loyalty points. Now we have already seen a question where we have seen how to account for loyalty points. This is slightly more comprehensive question and slightly confusing also because the language used is not clear. KK Limited runs a departmental store which awards 10 points for every purchase of 500. So you purchase of 500, you get 10 points, which can be redeemed by the customers for future shopping with the same merchant. Unutilized points will lapse on expiry of 2 years. So for 2 years it is valid, after that it will be expired. Value of each point is 50%. So 500 purchase you will get 10 points and the worth is 50% means you will get rupees 5. That is basically purchase for 500 get rupees 5. Simple ratio if you want to understand. During the period 1-2, entity awarded 1 crore points. So if to award 1 crore points, how much do we need to sell? For 500 points, you get 500 rupees, you get 10 points, means 50 times sale. So 1 crore means sale is 50 crores. To various customers, of which 18 lakh points remained undiscounted. So this remained undiscounted as on 31st of March of year 2. Now actually the term should have been unredeemed. They are saying undiscounted. Maybe there is some process, you get the points, get it discounted or use it as a discount voucher. That is what you can understand. Management expects that only 80% of the total award points will be redeemed. The expectation is out of this 1 crore, 80% will be redeemed. But if you see, 18 lakh points are only left. Means what? 82 lakhs point have come back for redemption. 82 lakh points have come back for redemption. Now here there are two types of assumption, and by looking at it first time or on a plain reading of this, what I understand and what generally we understand is 82 lakh points have been redeemed. But sir, they said only 80%. Arey Baba, this is just an expectation. Actuals can be more than expectation. So my first understanding is 82 lakh points have been redeemed, and out of these 18 lakhs when they come for redemption next year, I will assume 80% will be redeemed. That is a logical understanding. But what they have taken an assumption is even for this 82 lakh discounted points, only 80% redemption has happened. Only 80% redemption has happened. Maybe because the voucher value was not so. Now what could be the reason? Maybe because sometimes you get a voucher for 100 and you go to buy and they say that minimum you need to buy for so much of amount. So only this much amount can be redeemed. Or for example, if you take our iCash, you can use it only for 20% value of the course, right? So that could be a restriction. So what they have said is of this 82 also, 80% is what is redeemed. The company has approached your firm with the following queries and has asked you to suggest the accounting treatment under the applicable Ind AS. Number 1. How should the recognition be done for sale of goods worth 10 lakhs on a particular day? So if you sell goods of 10 lakhs on a particular day, how much will be the, how will you do the accounting? So let us handle this one easy. Sale is 10 lakhs. Sorry. Sale is 10 lakhs. How many points will be awarded? Points will be 10 lakhs. Divided by 500 multiplied by 10. So this goes off, you get 500, 5 into 2, so you have 2000 and 0, 2000 and another 0, 20,000 points. Value of points expected to be redeemed is how much? 20,000. Each point is worth 0.5 and there is an 80% probability or 80% expectation of redemption. So 10,000 into 80%. Now what do we understand here? This is one performance obligation. This is the first PO where we have given goods worth 10 lakhs. And there is the second PO, second performance obligation, where we are saying we are giving you something worth 8,000 as a discount voucher or a loyalty point, which you can come back and get it redeemed or get it adjusted in the future. Okay, so there are two performance obligation. And what is the transaction price? Transaction price will remain to be 10 lakhs because that is the consideration we have charged from the customer. Now what do? This 10 lakhs of transaction price will allocate against the two performance obligation. So let us do the allocation. Allocation of transaction price First performance obligation is sale, second performance obligation is loyalty points. What is the standalone selling price? Standalone selling price is 10 lakhs here. And for loyalty points, the value attributable is 8,000. How will we allocate this? The allocation would be pretty simple. The total standalone price is 100,8000. How much will be allocated? Here we will allocate 10 lakhs divided by 10 lakhs 8,000 multiplied by 10 lakhs. And here we will allocate 8,000 divided by 10 lakhs 8,000 multiplied by 10 lakhs. Now, to save time in the examination, what you can do is, you can of course ignore the zeros that all of you are aware of. If you are using this calculator in a Citizen City or ORPAT, which has this structure, what you can do is, I will just divide 1000 divided by 1008. 1000 because here these are the same, right? So 1000 divided by 1008 if I do, I get some number 99.20. Then I will multiply this by, first one is 10 lakhs is equal to, if I press, I get 992063. 992063. And for the next calculation, I can just type 8,000 and press is equal to, I get 6.57937. So revenue will be recognized for 9,92,063 and loyalty points, the liability will be 7,937. So the entry would be bank account debit 10 lakhs to sale 9,92,063 to liability 7,937. Sorry, please write liability for loyalty points. Just don't write liability. I was looking at one certified copy. The entry is asset account debit to provision account. So instead of writing PPE, that should not be done. Okay, so this is the first one. 992 7937, and this is the journal entry. Now come to the second part. How should the redemption transaction be recorded in the year 1-2? The company has requested to present the sale of goods and redemption as independent transaction. Total sales of entity is 5,000 lakhs that we had calculated already. So for the second question, sale is 5,000 lakhs, 5,000, 1, 2, 1, 2, 3. As and when you get used to, you can start ignoring the thousands and all at the end. Okay, sale is how much? 5,000 lakhs. Points is 100 lakhs or 1 crore. Okay. Expected value of points to be redeemed. How much is the expected value of points to be redeemed? 1 crore into 0.5 into 80. This 1 crore into 0.5, 50 lakhs into 80%, 40 lakhs. So what we are saying, rupees 40 lakhs worth of points will be redeemed, and right now we have sold goods of 50 crores. So there are two performance obligations, sale of goods and points to be given in the future. So how do we allocate it? Allocation of transaction price. Sale 5,000 lakhs. Points 40 lakhs. Total is 5,040 lakhs. The transaction price is 5,000 lakhs. So allocation would be, here it is 5,000 divided by 5,040 multiplied by 5,000, and here it is 40 divided by 5,040 multiplied by 5,000. So again, to save time, what you can do, 5,000 divided by 5,040 is equal to 5,000 divided by 5,040 is equal to, you get some number, multiplied by 5,000 is equal to, you get 496031746. I think I have taken the right numbers. 49 crores, 60 lakhs, 31,746. That is the revenue. And 40 is equal to, if you press, you get 3,96825. 39 lakhs 68,254 rounded off. Okay. So, bank account debit 5,000 lakhs to sale 496031746 to liability for loyalty points 3968254. Okay. Now that is the entry for revenue recognition. Now in the current year, what is the redemption that has happened? Redemption is 82 lakhs into 80%. Please note, this is an assumption that whatever point I have come from for discounting, only 80% of that have been actually redeemed or availed of. Okay. As I told you, after the question ends, I will also show you how it should be done if you assume that 82 lakhs full value of points have come for redemption. Okay. So 82 lakhs into 80%, how much is this? 82 lakhs into 80%, if I do, I get 65 lakhs 60,000. This is the points which is redeemed. Okay. Redemption is 6560 in the current year. How much is the revenue to be recognized? Revenue to be recognized is 6560. This is what has been redeemed or what has come for redemption out of a total expectation of 80 lakhs. Okay, because we have said or we have assumed that 80 lakhs will be redeemed. Out of that, 6560 has been redeemed. So for this much amount of redemption, we will recognize revenue. So for 80 lakh points, revenue attributable is 3968,254. So for 6560, it is 6560 points redeemed divided by total expected multiplied by 3968254. So 6560 divided by 8000 multiplied by 3968254. If I do, I get 3253968. I get 3253968. So think of it this way: 80 lakhs point. This is the total expected redemption. Out of this, redeemed is 6560. Unredeemed is 18 lakhs into 80%. 18 lakhs into 80%. 1440123. So out of 80 lakhs, 6560 has been redeemed. 1440 is unredeemed. So revenue will be 6560, that is redeemed, out of 8000 multiplied by 3968254. And liability will be 1440 closing balance divided by 8000 multiplied by 3968254. So 714286, and this comes out to 3253968. And if you do the total, this plus this, you will get 3968254. So you will recognize revenue for 32,53,968 and you will continue to show a liability of 714,286. Bank to sales to liability 3968254, 32,53,968, this number. For this, you will again recognize the revenue by passing the entry liability account debit to sales account 3253. Why sales? Because so many points have been redeemed in the same year. Now, couple of things here. Sir, they have said that 60 to 70% will be redeemed in the next year. That is an expectation. Actuals can be different from expectations. Sir, they said 80% will be redeemed. Then we have continued to assume that even out of those 82 lakhs, 80% has been redeemed. Alright, Then, how much of the deferred revenue should be recognized at the year end, considering that only 80% of the points will be redeemed? So, deferred revenue will be how much? Deferred revenue will be 714,286. So, deferred revenue would be 714,286. Alright. Then, In the next year, 60% of the expected outstanding points were discounted and the balance 40% of the outstanding points still remain outstanding. How much of the deferred revenue should merchant recognize in year 2, year 3, and what will be the amount of balance deferred revenue? So what they're saying is, out of the 714,286, 60% is redeemed, 40% is unredeemed. So into 60% if I do, I get 428,571. So redeemed portion is 60%, which is 428,571, and 40% is unredeemed portion, which is 285,714. 285,714. If you round it off, this you can make it 2 or this you can make it 5. Okay, 428,572. 428,572 has been redeemed, so you will debit 428,572 has been redeemed. So in the next year, you will debit the liability account and transfer the amount to sales account by 428,572. Now this is a quicker way to do because there is no complication involved. Otherwise, what you need to do is, if there are complications involved, then what you need to do is, alternatively, points redeemed in year 1, year 2, 82 lakhs into 60%. 82 lakhs into 80%. 65 lakhs, 60,000. Then in year 2, year 3, how many points? In year 2, year 3, how many points have been redeemed? 18 lakhs. Of this, 80% is the expected redemption. Of this, 60% has been redeemed. So 18 lakhs into 80% into 60%, that is 864,000. So what is the total? Total redemption is 6560 plus 864. 6560 plus 864, it is 7424000. So revenue is equal to 7424000 total redemption divided by 80 lakhs, the redemption total expected redemption, multiplied by 3968254. 3968254. This will give us 3968254 into 7424 divided by 8000. I get 368253 9.7, that is 3682540. Okay, so revenue cumulative is equal to 3682540. 20x1 x2 revenue is equal to, how much did we recognize? In year 1, year 2, we recognized revenue of 3253968. 3253968. Balance to be recognized 3253968. If you subtract it, you get 428572. 428572. 428572. The same thing we have got as when we calculated here 428572. Basically, whatever is the outstanding value, 60% of that will give you the same answer. A shortcut, it is valid to calculate the same way in the examination, and also will be helpful if you have to do MCQs. Okay. Then last question: how much revenue will the merchants recognize in year 3, year 4 if 3 lakh points are redeemed? See, in the year 3, year 4, the validity is over, the point validity expires. So whatever is the balance amount in the liability account, entire amount will be recognized as revenue. So in the last year, entire amount of 285,714 that we calculated as balance here, this number 285,714, this entire amount will be recognized as revenue. Okay, so this is how we have to solve it. Now, if we assume the second scenario that entire 82 lakhs have been redeemed and in next year 80% of 18 lakhs will be redeemed. Okay. Now here also there are two scenarios possible. One, we already know or we are doing it at the year end, then we will consider 82 lakhs and do the accounting for it. Or otherwise what we will do is, whatever revenue we have allocated based on our estimate of 80%, that is 3,968,254. 3,968,254. This is amount allocated to loyalty points. Okay. Now what we will do is, we know that 82 lakhs have already been redeemed, so this will be split between 82 lakhs and 18 lakhs into 80%, that is 14 lakhs 40,000. So basically what we are doing is, we are splitting the total estimated revenue between 82 lakhs and 14 lakh 40,000. Okay, which means revenue will be equal to 82 lakhs, the points redeemed, divided by 82 plus 14 lakh 40,000. 82 lakhs plus 14 lakh 40,000, that is 96 lakhs 40,000, because the estimated number of points to be redeemed has changed. Initially when we did the accounting for it, we knew that 80% will be redeemed, but as we progress towards the year end, we got to know that 82 lakhs have already been redeemed and another 1440 will be redeemed in the future. So this 3968 has to be allocated between these two. So into 3968,254, if you do 82 lakhs divided by 9640 multiplied by 3,968,254, we get 3,375,486. So this will be the revenue to be recognized, 3,375,486, and balance amount will be shown as deferred revenue or a liability. Okay, that is the second assumption, which looks to be more logical, because if 82 lakh points have come for discounting, how can it be that only 80% of that has been redeemed? So if you, unless it's a very weird scenario that there is a restriction on redemption, that should not be the case. Okay. Now we'll quickly have a look at the examination question based on these loyalty points. That will give a very good understanding on how to approach it. Big Deal is marketing company having its departmental store in a city. The company sells diversified product. To attract the customers, the following plan has been adopted. For every purchase of 400, the customer is awarded with 6 points. Each point is redeemable on any future purchase of the company of the same store situated in any of A class city within 3 years after 31st March. Value of each award point is 0.6. Following things have happened. Assess that the sales of the company during the year 3-4 is 150 lakhs. So 150 lakhs has been the sale. 150 lakhs, what is the ratio? They have said for 400 you will get 6 points. So 150 divided by 400 into 6 if you do, 150 divided by 400 into 6 if you do, you get 2.25 lakhs. Awarded 2,25,000 points to various customers based on first information. Estimated that out of the awarded points, 54,000 points will remain unredeemed as on 31st March, which shall be eligible for redemption on 31st March, and expects only 75% of points will be redeemed in the future. So, the previous question that we said, they said expected that 80% will be redeemed total. Here they are saying only for the future 75%. As an accountant of the company, you are required to suggest accounting treatment in the following case. How should the sales and redemption be recognized and recorded as independent transaction in FY 23-24 as per Ind AS 115? Now here again, points awarded is how much? 2,25,000. So what is the value of each point? Value of each point is 60. So value of points is equal to 2,25,000 into 0.6, that is 1,35,000. Okay, 1,35,000. Sale value is how much? Sale value is 150 lakhs. 150, 1, 2, 1, 2, 3. Okay, so total is 135 plus 150, 00. You get 15135,000. This is the total. Now, how will we allocate? Allocation will be for sale. For sale, the allocation will be 150, 00, and one more 0 I will add it, or I will add fully. 123 divided by 15135 123 multiplied by 150 12 so it is basically 15000 divided by 15135 multiplied by 150 150 I think I added 1 0 extra 150 123 you get 148 lakhs 66,204. So this will be 148 lakhs 66,204. This is the revenue to be recognized. So let us bank account debit 150, sales account 148,66,204 and liability under the customer loyalty program 133,796. This is the balance number. How do we get this? Simple. 135 multiplied by 150 divided by 1513500. Okay, that is how it is done. Then how many points will remain unredeemed? 54,000 points are unredeemed. So points not redeemed is how much? 54,000. In future they are expecting only 75% redemption. Expected redemption is equal to 75% of 54,000. So 54,000 into 75% if I do, I get 40,500. This much will be redeemed in the future. How much is redeemed? Redeemed is, we have given 2,25,000 points minus 54,000 is unredeemed. So 225,000 minus 54,000 unredeemed is 1,71,000. 1,71,000. So revenue for points is equal to, how much will be recognized in current year? 1,71,000 divided by 1,71,000 divided by 1,71,000 that is redeemed in the current year and 40,500 that will be redeemed in the subsequent year multiplied by 133,796. 133,796. So divided by 171 plus 40,500, I get 211,500. 171,000 is equal to 180 into 133,796. So I get 108,175. This is the revenue to be recognized for the points discounted. Now just to recap it, points which are not yet redeemed is given to be 54,000. In future they will get a redemption of 40,500 only. Okay. How many points have been redeemed in the current year? 225 minus 54, 171 has been redeemed in the current year. 171 has been redeemed in the current year. So 171 which has been redeemed and total expected. See, earlier the points we have given is 225. But now what is the total points that we are expecting to be redeemed? Already redeemed 171 plus future redemption 4,500. So 171 plus 4,500. 171 plus 4,500 you get 211,500. 211,500. This is the total points to be expected to be redeemed. So whatever is the revenue we have recognized or whatever is the liability we have created for loyalty points, that has to be allocated between 4,500 for future liability and 171,000 for current revenue. So the revenue comes out to 133,796. Okay, so the entry would be liability account debit to revenue account 108,175. This is one of the assumptions. There is another assumption what institute has taken, and the second assumption is that when we are calculating the points to be redeemed, what you are saying is, now there is another assumption taken by the institute, and that assumption is, I have total points of how much? 2,25,000. Out of this 225 minus 54, 220, that is 171,000 has already been redeemed in the current year, and in the future only 75% will be redeemed. So the valuation will be for 24,300. So what they are trying to do is, total points is 225,000. Split into two parts, 171,000 already redeemed and 54,000 to be redeemed in the future. Now out of for this 171, the valuation is 0.6. So 171,000 into 0.6, it is 102600. And for this 54,000 into 0.6 into 75%, means at the time of booking revenue itself, we are saying whatever is redeemed in the current year has been fully redeemed, and whatever will be redeemed in the future will be redeemed to the extent of 75%. So this will be 54,000 into 0.6 into 75%, that is 24,300. So total comes to plus 102600, 126,900 versus what we did in the first scenario, where we took 1,35,000 for entire 2,25,000 points. So what they are doing, for entire 2,25,000 points at 0.6, they are taking it to be 135, whereas in the second assumption, what they are doing is, out of this 225, for 171 take 100% value, and for balance 54 take only 75% value. Now this is very different from the question that we just now saw, where for current year also we have taken 75% in the previous example, that was 80% in the previous question, the study material question. There we have taken 80% for redeemed part also, for unredeemed part also. So that is where sometimes the language can be very much confusing. Even in the previous case, they said 80% is expected, 80% is for the full value. But out of that already some amount has come for redemption, that is 82 lakhs, and 82 lakhs was actual redemption. So all in all, we have multiple scenarios. First assumption what we saw in the study material question is 80% of total value, because the question had that wording which said 80% of total value or total points will be redeemed. Here in the second question that we saw, again these are two assumptions, assumption A, assumption B. Assumption B, we considered 75% redemption after booking liability. Here second scenario, 75% redemption before booking liability. What I mean to say is, in the first assumption that we took entire 225 points and 0.6 value 135 was considered for creating the liability. In the second assumption, what the institute has done is, they have said out of this 225, whatever has been redeemed take the full value, whatever has not been redeemed take the expected value for creation of liability. Okay. So that is what is the different type of assumption that has been taken. A very important question for practice.